Welcome to Business Matters. Once again, we're looking at technology and the global business environment. This is the second part, our second half of the series of lessons we are doing on technology and the global business environment. Let's get right into it. Our objectives are: 1, to outline the factors that determines a country's standard of living and its quality of life. We also want to look at an explanation of the national income and its variations. We want to define national income, gross national product, gross domestic product, and of course, per capita income. And finally, we'd like to explain how these concepts affect growth and development and how they impact on standard of living and quality of life. Let's look at a definition here. Standard of living. What is it? Standard of living is the quantity and quality of consumer goods and services that persons find proper and fitting. Or, standard of living is the degree of wealth and material comfort available to a person or community. Let's now look at some factors that determine the standard of living. We want to look at the indicators, yes? Number 1, we want to look one of the indicator of determining standard of living is the level of consumption of goods and services. Yes, the level of consumption of goods and services. Secondly, the average disposable income of the population. Yes, that means the level of income that an average members of the population have for spending, for buying, for purchasing things they need. Thirdly, the level of national ownership of capital equipment. That is, to what extent are the citizens owners of capital assets or capital equipment. Fourthly, access to modern technology. So we can determine an area, a community, or a country's standard of living by the people's access to modern technology. As well, the level of investment in research and technology. Now, this is very important because it is through research and investment in research and technology that new methodologies can come about in terms of production, in new product ways to produce goods. So new strategies and new products can be created. We may have new ways of doing things. The management of new strategies to manage the environment. So a host of spring off can come from this matter of investment into research and technology. Now we'd like to look at per capita income, standard of living and per capita income. So let's go there. Now, per capita income is equal to the gross national product or the national income divided by the total population of the country. So for argument's sake, if we have a population or a group of persons and their total or national income is $100,000 and the amount of persons in that particular area or country, let us say, is 200, then it means that the per capita income is $500. Now we're going to go a little bit deeper in relating to per capita income. Now, per capita income is an estimate, yes, and not an absolute calculation. So economists are really seeking to find a guide to determine the state of the economy, right? To what extent is the economy growing or not growing? To what extent the quality of life of the people in the society or in the country is better or worse off? Now, secondly, per capita income allows for comparison between countries, standard of living. So, for example, you might have a situation where Trinidad and Tobago, their per capita income is, let us say, $2,500, and Jamaica's per capita income is $2,000. A conclusion that could be made here would be that the standard of living in Trinidad and Tobago may seem to be better than in Jamaica, because their per capita income would be more than Jamaica's. Per capita income does not show how income is distributed. All right, so it's just remember now, the national income is a gross or an aggregate figure, right? It does not show whether you have majority of the population is earning above a certain threshold or a certain amount per month. It does not show that. It does not show, as I said, income. The income is not, distribution of the income is not shown, right? 3 or 4 or 5 persons could be billionaires, and the other, let us say 95,000 or 95,000 persons are working below the minimum wage. But because the 3 or 4 or 5 persons, their income is so large, then it will make it seem that the country is doing well because the per capita income is high. The per capita income does not measure wealth that does not appear in income. I say that again. Per capita income does not measure wealth that does not appear in income. So if there are some wealth that was transferred and from one person to another, a home or a car, yes, it is not money. It is not showing movement of money. What it is showing is movement of asset. So the per capita income may not capture that information. Per capita income does not take into account variance in prices from one year to another. So if the price change, right, a good today or a tin of milk today was for $50, and then next year it is for $60 or $70. Yes, though the price movement has taken place, the per capita income does not look at the nuances, yes, and the variances in the price. Per capita income, we're still on that, and we're saying that the calculation does not take into account the effect of government spending on national income year on year. In other words, 1 year there may be an increase in salary, so government is paying public sector workers more as against the other year, the previous year, where the salary was at a low rate, and the government has now increased their payment to the public sector workers, so they are paying out more money. So the calculation does not take into account the effect of government spending on national income year on year. Okay. So we're going to move to look at quality of life. Now, quality of life is a broad term than standard of living. So we'll say in mathematics, standard of living is a subset of quality of life. Now, quality of life is the standard of wealth, comfort, and happiness experienced by an individual or group. The degree to which an individual is healthy, comfortable, and able to participate in or enjoy life events. Now, quality of life is highly subjective. Why? Because economists use it to have a point of reference. In other words, you try to determine quality of life as a point of reference in assessing the economy. Whereas one person may define quality of life according to wealth or satisfaction with life, another person may define it in terms of capabilities, that is, having the ability to live a good life, yes, in terms of emotional and physical well-being. Let us look at some factors that determine quality of life. Here are the indicators. 1, the extent of security enjoyed, that is the degree to which the country has less or more crime. Availability of wealth and educational and recreational facilities. Diet and nutrition, the quality of your diet and nutrition. Life expectancy, the rate of infant mortality, access to public utilities such as electricity, potable water, and technology. Let's move to look at national income. Now, national income is the total value of the country's income over a specific period. This income may comprise wages, salaries, profits, interest, rent, and pension payments, among other things. So really, national income is where we're adding all of the earnings or the income by the various sectors in the society. Gross domestic product, what is it? It is the total monetary value of goods and services produced within the country for a year. So when we talk about gross domestic product, we are really calculating production or the value of the production that has taken place within the borders of the country, as against gross national product. Now, gross national product is the total goods and services produced in the country, as well as those produced outside the country by its citizens. So within this definition, gross national product is taking into consideration all that is produced within the country, as well as that which is produced outside of the country by the nationals or the citizens. Now, of course, in calculating the gross national product, we subtract depreciation from the gross national product to give us what is called the net national product. These measurements does not account for aspects such as environmental costs. So like what we're talking about now, we're saying that gross national product, gross domestic product, all of these do not take into consideration aspects such as the environmental costs, the non-economic contributing task, or income inequalities. They don't measure those things. That's what we're saying. Now, uses of national income data. What is it used for? Now, government uses it to indicate changes in standard of living. So it's a guide to see the movement in standard of living in the country. It compares standard of living of different countries. So you can use it, right? National income to compare countries. Thirdly, it is a comparison. Yes, you can compare to see to what extent the economy is growing. It gives an indication of the changes in the distribution of income. So if your national income is growing or increasing, it is an indication that it's a likely indication or likely situation that the country is increasing in its earnings and people are earning more. The other point we want to make is that it determines the rate at which national income is growing. Alright? So now let's look at the calculation of national income. Calculating and measuring national income is important. Why? Well, it assesses the economic growth rate, right? And in doing that, countries may use varying methods to come up with their national income. One method that is used is referred to as income method. This method focuses on the production aspect of things, the production of goods and services, yes, which involves the use of land, labor, capital, the factors of production. Now, we want to also point out that income is generated from employment. So we are counting income that is generated from employment in the form of wages and salaries. We are also counting profits and profits that is earned now from businesses. We are counting interest that are earned from investment, from bank accounts, yes, return from debentures, of course, rent. That means rent income and income from abroad, right? That is earned by persons in the country, and so that is counted as well. Income generated from self-employed professionals and sole proprietors. So when we're doing the income method, these are the areas that are considered in calculating the national income. So we want to go to the second method, that is called the expenditure method. In this method, what happens here is that we are seeking now to look at the consumption side of things. Yes, expenditure refers to all the purchases made by residents, government, and the business enterprises. So we're looking at what they spend. Now, the total amount spent on investment and the total amount spent on investment and consumer goods and service produced during the year. So that we pay attention to that when we're dealing with the expenditure method. Now, there are some areas that attention is given to. in calculating national income using the expenditure method. One is the purchases of consumer goods and services by residents and households. So we are further breaking it down. Secondly, government expenditure on goods and services. Thirdly, business enterprise expenditure on capital goods and stock. And of course, the net result of export as against imports. The third method that is used to calculate national income is referred to as the output method. Now, this method looks at the total net output of every form of production. So then let's back up a little bit. The income method, we are calculating, adding up all the different aspects of income earning avenues. With the expenditure method, we are looking at the end from consumption, the level of consumption, the level of expenditures, yes, for goods and services, how money is spent, or how money is spent for goods and services, for purchasing items and so on. But the third method is referred to as the output method. The output method, this is the total net output of every form of production. It is totaling the value added by each firm to a good or service at each stage of the production, or taking final cost of the product. So what they're doing now is really counting the value added at each stage of the production, from the inception or the production of the goods to the time when it reaches a consumer. What are some weaknesses of national income calculation? One, there's in relation to monetary terms. National income calculation is done in monetary terms, but some goods and services are not exchanged for money. Thus, it becomes difficult in measuring these accurately. So we are saying, if there's a barter situation taking place, that somebody is exchanging goods for goods, or some goods is moving for goods, then it is not going to be reflected in the national income calculation. The informal economy is another situation that is not reflective completely in the national income calculation. Why? Because the activities of the underground economy and the amount of income earned cannot be truly quantified. The government does not know about all that is taking place, right? And thirdly, the problem of double counting. Now, double counting is usually associated with the inventory method. Double counting implies the possibility of a commodity like raw materials or labor being included in national income more than once. Let's go on quickly. Now we want to look at national income as against versus standard of living. Now, to what extent is national income a good or bad indicator of standard of living? Well, one, national income is a monetary figure. Yes, we said that earlier, and it is derived from total production of goods and services. But standard of living looks at the amount and state of the goods and services consumed. So in other words, national income is just simply adding up the production of goods and services, the total production of goods and services, but it is not taking into consideration the amount and state of the goods and services, the quality of the goods and services, right? Secondly, standard of living centers around consumer goods and services, yes, while national income looks at both consumer and producer of the goods and services, right? So national income is adding both what the consumer is using as well as the producer. But standard of living is centered around what now? Consumer goods and services. Thirdly, a shift in government spending may negatively affect standard of living. but does not decrease. This is very important. Does not decrease the national income figures. And what that is saying is, for example, if there's a shift in spending for social services, now social services would mean that the government is spending money to help the poor by, for example, giving them a little task to do and they are earning, right? If they shift that same amount of money that was in social services and they put it into defense to protect the country, they would have been spending, but the standard of living of the people will be negatively impacted. Yes, because it will be less income to them. National income do not indicate the type of life the people are living. Very important point. We're looking at the comparison here. National income do not indicate the type of life the people are living. An increase in national income may be from working long hours and not improved pay package. So what we're saying here is that we may have a higher figure for national income this year, but it is not as a result of the fact that the people have gotten raise in their pay. It may mean that they are working 2, 3, 4 jobs. Now, an increase in national income may be due to inflation. Inflation increases national income in monetary terms, but does not add to the growth of goods and services. So, let me go back to this and say, what we're saying here is that inflation may cause more availability of monies, and really inflation is where we have a lot of money chasing few goods. So it may seem when we add a lot of monies in the economy, right, and that will say that the country has a high income, national income, yes, but it does not show, it cannot determine, or you cannot conclude that there is growth taking place in relation to goods and services being produced. All right. Thank you very much for participating and sharing with us as we look at the second lesson rather in the series, looking at the business and global business environment. Thank you very much. Please like and share this video. Click the subscribe button if you like the content. Thank you very much.